The way I invest is find an undervalued story and buy a lot of it. And with the amount of drilling we have, with the team that we have, with the jurisdiction of the assets that we have, I still can't believe that we're trading at this market cap. But inevitably over the longer term, those situations correct themselves. And with the amount of drilling we have coming out, it's like, honestly, from a valuation to amount of news coming out, I don't think our company's ever been cheaper.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are watching and listening to the Financial Survival Network. I'm Kerry Lutz, and, well, I'll tell you what, these have been exciting times. We've seen gold recently eclipse $1,800 the ounce and now hit a little bit of resistance. Cryptos to the moon. Inflation, surprise inflation. What does it all mean? Well, we're going to get an update from our sponsor, Trillium Gold Mines, today from CEO Russell Starr. Don't forget, Russell's also got his master's in economics, and want to get a perspective from you, Russell, on what is going on here in the world here. Like, why all the instability, the surprise over the inflation print, that's the biggest surprise to me, that anybody could be surprised about it.
Yeah, look. The Fed has systematically changed the way inflation is being measured over the last 2 or 3 decades. Literally, if you were to actually take the historical math, call it from 1980, 82, you'd be looking at 6 to 10% inflation in the U.S. right now. And they've substituted all sorts of crazy hedonic pricing mechanisms where they suggest that, one of the ones I always laugh about is they don't measure housing price inflation with house prices. They measure it by what you theoretically could rent your house for if you were to rent it, which in my opinion is ridiculous. And so you just end up with all these mismatches. So when you see the amount of money that's being printed day in and day out, you see the bullion banks trying to restrain the price of gold. I mean, all of this is effectively the Fed's way of trying to keep the U.S. dollar in its secure sort of dominant position that it lends itself to. But the reality is, if you look historically at any other country that's done what the U.S. is doing, it's almost always being followed by massive inflation. And you got to keep your eye on what China's doing. You got to keep your eye on how China is now allowing oil to be settled in yuan or gold. You've got to look at, Russia's looking at eliminating the SWIFT network. And so these are all the anecdote that I use is, imagine you've got this massive dam that's the US dollar, and then there's just these little cracks, and you can put a Band-Aid on one of the cracks, but then another one appears, and then another one appears, and another one appears. And literally you're looking at, and I'll say it over and over and over, you're going to be looking at, 6 to 12% inflation, maybe hyperinflation in the very, very near future. And if you're not long gold, copper, silver, equities as well in those products, and I pick on those 3 because they're the least invested of any 3 commodities globally, period. And so you're going to have massive deficits. You've got companies that are going to need to be buying companies. And then that's a great segue into talking about why Trillium maybe is so interesting.
Yeah, definitely interesting. And as a prelude to that, you're putting your money where your mouth is. You've been actively buying Trillium stock recently at prices above where it's trading at currently. So you must be feeling bullish about the company. I know we've been waiting with drill results with bated breath. I know you're extremely frustrated over this.
Yep. Yeah. What? It's almost like a calamity of sort of errors that precipitated this issue. One of them is, of course, COVID. And for all of your U.S. listeners, you probably don't have the perspective that the Canadian listeners might have. we're still in lockdown. Companies have cut staff. And so what transpired in the summer was obviously $2,000+ gold. Everybody financed, everybody started drilling, including the majors who continue to drill. And then you had basically labs cutting back on staff, and then just this tidal wave of core that came at the assay labs. That being said, what the assay labs do is anybody who has a fixed continuous contract always gets put ahead of the queue. And so guys like ourselves who aren't a major, we're not generating cash flow, we continue to get put at the back of the bus. And it's just not a sustainable business practice, in my opinion. And so we've been very, very frustrated. We've moved to a brand new lab. Everything's being rushed. But the good news, as we're talking here today, is you should expect assays literally as early as next week. We've got 5,000-6,000 meters of core. It's almost surreal to, like, normally you'd be getting 2 or 3 holes every couple of weeks. You're going to get like 7 or 8 holes basically coming at you in the next 1 or 2 weeks, which is great as an investor because, as you mentioned before, the gold price is peeking its head up. A lot of people are looking at real rates and forecasting that the gold price is going to continue to go higher. So along with a better bid gold price, we should be having a lot of news coming out. And then, of course, the one thing, I try to keep people focused on what we're doing with the drill bit, but everybody needs to remember that we have a massive and dominant land position in Red Lake from the exploration perspective all along that Confederation belt, which is kind of sitting at bookends with a company called Prosper Gold, which found a bunch of golden tills and everybody's all excited about it. And then Great Bear on the other end. And we own a lot of what's in between.
Right. So we're going to get some idea of the drill results. I know investors have been clamoring. Hey, I'm a shareholder as well. I've been clamoring. Yep. I'd love to see what's going to happen there. And in the meantime, your 40,000 meter drill program continues on. Yeah,
it's in my opinion, whoever's selling now, I hope they're listening to this page because someone is using my least favorite number, anonymous, selling ahead of literally 5,000-6,000 meters of data coming out is not smart. That being said, whoever is buying is going to really benefit from that. But you're looking at I think we press released maybe 2,000 meters a month ago from stuff we drilled pre-Christmas, before we even had our Newman Todd model. And then you're getting now more core, call it another 6,000 meters coming at you. And then obviously we've got 2 drill rigs turning at Newman Todd Rivard, and we're about to start drilling, honestly, what is maybe one of the most exciting land positions in Gold Center, which very likely is the continuation of the world famous Red Lake mine. So I look at what we've done at Newman Todd. I look at the model we've built that you can see on our website, on our presentation. I look at the long section and the cross section and just how much gold is there from surface down to 400 meters. And when you look at our market cap versus what we have, they just don't jive.
Yeah, there's definitely a disconnect there.
Very, very big.
So you've got a 3rd drill ready to go, imminently ready to start turning at Gold Center.
Yep. And that's for a lot of people forget just how incredible the gold market was, how many millionaires the gold market made a decade ago, a little over a decade, I guess. I mean, right now, all of the thunder is being stolen by crypto, cannabis, and psychedelics. But it's only a matter of time before, like I said, gold rears its beautiful head and peaks above 1,900. And I think you see a renewed bid in the gold space. And companies such as ourselves that are sitting on, basically what I will call the next mine in Red Lake, trading at our $50 million fully diluted market cap. It's almost, well, you asked me why I continue to buy. The reason I buy is because for the amount of gold we have at Newman Todd, it's in the multi-millions. And what we're trying to do with our continued drilling and the 43-101 that we should be bringing to the market by the end of the year, it just doesn't line up. This is an extremely cheap story now, and what better way to better yourself and show your conviction than purchasing stock in the open market, which I continue to do.
Yeah, and well, Newman Todd hasn't been drilled deep yet. We know all about the area, right? And
Yep.
It's all over the place.
Yep. No, Red Lake is what's the best place to look for gold? Where there's gold. And we sit right beside the Rowan mine, which was a historical 1 million ounce 43-101 for Goldcorp. It's funny. Everybody knows about Newman Todd in Red Lake. It's just the investor sentiment in the market at large isn't there yet. So, and you mentioned it. I'm extremely bullish on crypto as well, and I'm trying to go to the market and explain to people that it's not one or the other. That they're siblings. They're a big brother, little sister, big sister, little brother. Whatever way you want to look at it, both of them perform a very similar objective and goal, and that is to protect your balance sheet, your personal balance sheet against inflation.
And many savvy investors out there, I wish I were one of them, but I know they have made monstrous profits in cryptos and then recycled those profits into buying bullion, physical metal, and quality mining stocks like Trillium, which sounds to me like a pretty good strategy.
Oh, no. Look, you're always limited by your own personal budget, but the reality is, and it's so funny, I had a conversation with my banker the other day, and I was like, well, what are you buying? And he's like, I just buy the Scotia Diversified Wealth Portfolio. And I was like, well, what's in that? And he's like, oh, we have tech, we have, home hardware, Canadian Tire. And I was like, well, what about your commodities? Like, how are you going to protect yourself against inflation? And he's like, what? There's no gold, there's no silver, there's no copper in the diversified wealth portfolio. It's bonds, which effectively have no use anymore with what the Fed and the Bank of Canada are doing with controlling the long end. And then equities, but none of those equities include sort of the backbone of what Canada is being built on, and that is the commodity market. Whether it's oil falls in that category, and it's a different story. But whether it's copper, gold, silver, nickel, whatever, people are just asleep at the wheel and not paying attention to what you just mentioned earlier on, and that is the beginnings of what could be hyperinflation.
Hey, I called this a while ago when the price of copper started going up after the March 2020 meltdown. And started getting close to mid threes and then getting up to the fours. I said, this isn't an economic recovery picture here that Dr. Copper is telling us. It's telling us we're getting commodity price inflation. And the base metals were going up as well. Everything was going up. And now we see every commodity, agricultural, industrial, whatever it might be, every commodity is going up.
And that's always synonymous with higher inflation. And it's funny, I can't remember the article. It was an interesting one that basically said that at any time in U.S. history when house prices were effectively moving at the levels they're moving at, inflation in the U.S. was between 4 to 6%. And I bet you that if the Fed would just take their collective heads out of their collective rears and start paying attention to what's going on, like legitimately in the world, like lumber prices, copper, everything that you just remarked on, and said, look, we're going to go back to the way we used to measure inflation because this just isn't working. People would be shocked, and the gold price would be $2,200, $2,300, $2,400.
Yeah, well, then they would have to do something, and the cure, in their opinion, is obviously worse than the disease. So, that's their conundrum. That's one of their own making. And, now the markets all are about what the Fed's doing. In any event, eventually it all comes down to the real economy, not Fed speak and all that. And that's why Trillium's so well situated. So we got these results coming out literally any day now.
And look, the way I invest is find an undervalued story and buy a lot of it. And with the amount of drilling we have, with the team that we have, with the jurisdiction of the assets that we have, I still can't believe that we're trading at this market cap. But inevitably over the longer term, those situations correct themselves. And with the amount of drilling we have coming out, it's like, honestly, from a valuation to amount of news coming out, I don't think our company's ever been cheaper. Like, we will be putting news out probably every week or two for the next 5-6 months.
And that's what we love to hear. There's been a little dearth of news, largely due to these assay labs and their inability to deliver. And like you said, that's a problem that can't be allowed to continue. They'll wind up with competition, and maybe that's the cure. In any event, you got to go over to trilliumgold.com, sign up for notifications so you will get the drill results when we do. And I should also mention the ticker symbols on the OTCQX, TGLDF, and on the TSX Venture, TGM. If you got any questions for Russell or the people over at Trillium, just send me an email to my personal address, kl@kerrylutz.com, and we will get you an answer. Russell, I cannot wait to see those results, and I'm literally waiting with bated breath, as I'm sure everyone in your office is, and we'll talk to you after you get them and review the significance of them.
You bet. Thanks so much, Kerry. Have a wonderful day and a great weekend.
The Financial Survival Network.